There's this unbelievable opportunity to buy a house, and it's surprising. And the reason why it's surprising is a lot of people did not think that, a lot of people thought rates were going to come down. And as a result of rates coming down, they thought that there would be more opportunities to buy houses and get less payments. All of that is kind of true. But what actually happened was the Fed had basically indicated that they were going to lower interest rates, and people thought they were going to lower rates because the reason why they thought they were going to lower rates is because they decided that, well, maybe the economy was going to slow down, and in order to prevent the economy from going into some type of recession, they would lower interest rates in order to offset that, just like they um, raised interest rates in order to slow the economy down. And so the Fed meets and they do lower interest rates because basically they thought that was the right thing to do. But around about the same time, what ends up happening is a uh, a jobs report comes out, and the jobs report basically indicates that everybody anticipated that there were going to be 150,000 new jobs. But instead of 150,000 new jobs, what ends up happening is there's 250,000 new jobs. And that was a total surprise to everybody. And so now the general sentiment is well, maybe the Fed won't lower interest rates because if there's that many new jobs, that's kind of like a sign of inflation. And that was the reason the Fed increased rates in the first situation. So when that happens, the whole market reverses. And when you start looking at interest rates and you start looking at what they did over this time period, it's kind of interesting to look at it. And so what I thought I would do is I'll show you what the 10-year Treasury did. So mortgage rates follow the 10-year Treasury. And so you can kind of see what the 10-year Treasury did over the last 3 months. And when you look at what it did over the last 3 months, you'll realize that rates were up here and they came back down and then they went back up. So let's take a look and see exactly what that actually looked like. So I'm going to show you 10-year Treasury. So now you can see on the screen the actual 10-year Treasury, and this is a 3-month chart. What's super interesting about it is if you go back and you look at it over here, what is this? This is July of 24. You can see rates were pretty high. And then there's this general belief that interest rates are going to drop, and you can see rates actually kind of coming down, going up, going down. And legitimately, between about the 7th of September and I'm going to go all the way to the beginning of October, in this period of time, you see interest rates at the lowest that they were over the last 90 days. And then the Fed actually meets. And when the Fed meets and that announcement comes out, you start seeing rates drift up. And now, 90 days later, rates are basically over here. You can see the 10-year is at 4.24. And over here, the 10-year was at 4.28. So over the last 90 days, we've literally had a dip in interest rates and then back up. So this period of time, a lot of people were refinancing, and I get that. And the people were refinancing because they were saving money on their mortgage, they were lowering rates, and there was a lot of that. And a lot of people that locked in on their mortgage rates during that period of time got a pretty good interest rate. Then when the interest rates start going up, it's not really publicized that much. So at first, everybody thinks that rates have dropped and they're still lower. And then all of a sudden, people start realizing rates have gone up. What's happened is a lot of people that were shopping for houses, all of a sudden their monthly mortgage payment is higher than it was during that time period, and they've paused. So what I've seen in terms of on my end, as somebody that originates a lot of loans, is all of what I'm seeing is the housing market has actually slowed down. And it's weird because I would have bet you that we were going to be in a lower rate environment, and not only a lower rate environment, that would continue for an extended period of time. But no, rates have drifted back up and the market has paused. And what this really means is that houses are sitting a little bit longer, and buyers that are coming into the market have an opportunity to not only offer maybe slightly less for the house, and I'm not seeing a lot of reduced prices, but what I really am seeing is a lot of deals where all of a sudden the terms are not as hard for the buyer. And so then maybe they're getting some seller help. Maybe they're doing reduced deposits. Maybe they're accepting a program. And some of the houses, they're even accepting less for the contracts. Now, this is not every house. Some houses are still flying off the market and people are offering above asking price and this, then the other thing. But there seems to be a huge amount of people that have just pulled back because they're uncertain about the payment interest rates. And there's also some uncertainty about the election. Nobody quite knows how this election is going to go, and nobody's 100% sure what the other side of this thing is going to look like. There have been some programs from both candidates that have basically said, hey, we're going to promote home ownership, we're going to help people, things from down payment, lowering rates, just government things that can affect people's housing payments and affordability of houses. So that's also caused people to stop. But I think at the end of the day, if you have to move and you have to, maybe you've outgrown your house, maybe you want to buy a house, maybe you need to move. I think buying a house now presents a pretty good opportunity for you to be able to move forward. And yeah, the interest rates will go up and down. And at some point in the future, maybe you end up having to refinance, wanting to refinance in order to lower your payment. And even your house price might fluctuate up and down a little bit. But if you're ready and you can afford a house, I think this little window of time is presenting people with an opportunity to get a lower price on that house, and not only get a lower price on that house, but maybe negotiate a deal in terms of the terms of the actual contract. I don't think people should wait. I think if you're ready to buy and this window is presenting an opportunity for you, I think you should buy that house and move forward.